paradise, and no more waiting on you tonight. And my dreams will never ever die. Can you feel that spark in our bones tonight?
Good afternoon, everyone. It's Monday, the time of the week to look at the markets and see where we are going, or at least hopefully get a bit of an idea. So, as usual, just quickly scanning the news headlines. European markets are a bit in the green. US pre-market mostly in the green except the Nasdaq futures. Oil is in its pullback, hasn't updated yet, I think. So it seems the risk on assets are a bit in the favor, while the risk off assets are still in their pullback. Mixed signals. There is in Hong Kong dropped like I think 5%. Asia, based on the new lockdown things in China because of COVID, that could start another supply chain problem there. Europe is in the green because the Russia-Ukraine talks resuming. There's a bit of hope there in the market. So, oops, I switching the live scene. There we go. Thanks, Peak. So there's a bit of hope on the Russia-Ukraine front at the moment. I have my doubts if it will really make any difference. Hopefully for all the people there it does, obviously. Treasury yields hitting the high points, going over the 2% in that's pretty much recession territory numbers. Hong Kong dropping. So it's a bit mixed signals there in the macroeconomics. I think today, tomorrow will be relatively quiet, but the big market mover is on Wednesday. Like Monday, no events. Tomorrow, producer price index. Don't see that as a big. Don't expect that to be a big market mover. But on Wednesday evening, European time, 7 in the evening, we got the Fed interest rate decisions, the economic projections, and the interest rate projections. So that's expected to rise from 0.25 to 0.5. It will be interesting to see if they still pushing that through, or if they go a bit more easy on things because of the whole geopolitical situation and the macro. For the rest, nothing shocking there, so let's dive into some charts. DXY continuing to be pretty strong. It didn't break it, what got rejected almost at the 99.5, but had a bit of a pullback, obviously, but it seems to be slowly trending up again. Will probably take a bit of time, but I think the 100 is in the books probably later this month, by the end of this month or April. So that's good and bad news. Bad news is usually Bitcoin is inversely correlated to the DXY. But the good news is that the market is still below and pretty much going sideways, so it has some opportunities to recover in the meantime. Stock markets still look very ugly. This is not the pre-market yet, but even though they might open a bit higher, still, even if they go like 2 to 3% up on the S&P 500, they're still below that descending trend line. And from the last peak to currently, we got a pretty high, pretty steep drop already. So there's nothing really bullish to say yet. Yes, we did make 3 higher lows, but we also made lower highs, and that's across the markets. So until we break this trend line, backtest it, confirm it, and bounce off, and like really make a significant higher high, like this more sideways. So if the S&P 500 goes to like 4.5k-ish with some confirmations, then we can say that we might have a short-term recovery or a mid-term recovery even starting. But until then, it's, yeah, it looks terrible from a TA perspective. And this is the dominant factor at the moment also for crypto, because yeah, with everything going on in the world, with food production, food prices rising, and nickel and stuff like that going through the roof, inflation rising to levels we haven't seen in a long time. Let's see if I can, if the charts will load today. It's trying, leave that in the background. So there's little argument to presume that this will recover quickly. Obviously the Fed could bring a huge surprise there perhaps, but we'll have to see. I don't expect them to take it more quietly. Gold still, yes, it got rejected at the previous all-time high, but that is pretty normal. So it had a bit of a pullback after an insane run. So if we quickly drill down to like a lower time frame, we'll take a look at the other hedges in a bit. The daily. And we take simple Fibonacci from the start of the move to the top. You see we only had a 0.382 retrace pullback, so shallow retrace, often where you reverse in bullish conditions, and there's no doubt about it that gold is in bullish conditions, definitely. We still have the huge cup and handle, and let me just clean up the chart a bit. If it lets me. Every time when I stream it seems to block loading new charts, but I'll just cancel that one. So gold is still in that huge cup handle from decennia all long, trying to break out its previous all-time highs. When it does that with some volume, some pretty strong price action, then actually the measured move will bring us somewhere between 2600 and 2900, maybe even. Keep in mind, it's gold, it's a slow mover, it could take a month, 2 years to get there, but it does seem like there has been a decade-long accumulation by big players in the market, and they're not ready to sell at all. So, quick sidestep in gold. Let's move to the Bitcoin daily chart. I see my drawings are still pretty much okay. We do have this confirmation from the bullish harmonics that might play out, but we're missing the reaction. Like all the technical conditions are there, divergences are there, there's harmonic patterns on very important time frames like the daily. Everything looks set up for a very big move to the upside, but will people buy crypto at this moment in a world where there's war and there's supply chain problems and there's still a pandemic going on? Will they buy a risk asset like Bitcoin or other crypto? It's a bit doubtfully. So the charts look great, but if the macro just fails, there's little. Would be quite a miracle for Bitcoin to break away from that and to move upside. But it's Bitcoin, miracles do happen. Bitcoin dominance pretty much sideways. Still, Bitcoin keeps being stronger than the altcoins at the moment. Ethereum to Bitcoin chart still seems to be breaking out of this very promising structure that we had earlier, and with this failed breakout it was just misery after misery, and it looks less good than Bitcoin actually, Ethereum, but if Bitcoin will go up it will pull everything with it. Well positions on Bitfinex. We have some smaller shorts are building and have been closed by the recent price action. That was quite amazing anyway. I'll get back to that in a bit, because yesterday night at the weekly candle close we seem to be breaking the major support levels and it just bounced back like madness. Total market cap, it's still holding that line, making slightly higher lows and lower highs. It's still in that decreasing volatile accumulation pattern, or at least breakout pattern. You see we had some wicks below it that was pushed up quite steeply, but it's hanging on the side. It's pretty much on the edge of a cliff and deciding. It has to decide which way it will fall. Because for now it looks like we broke that green support box and we're now failing to we're still getting rejected at this level, and that could bring quite a bit more downside. The next support level is pretty much 13-14% downwards, and it will also make a lower low in that case. 1.5 is your last line in the sand, pretty much 1.5 trillion. If we go below that, I just set an alert for myself. If it goes below that, then we're pretty much going back to these levels here. So it's not that yet, but it's close. It's hanging on. It's fighting for dear life here. So let's hope it wins that fight. And that was the circle to the US dollar index. Quickly looking at the daily cycle, this still is in play. Yesterday at the candle close we broke down and we instantly got bounced from this triangle here. See if I can quickly update it a bit. And to be honest, it doesn't look like, I don't think we will see a major move just yet. It wouldn't surprise me if we just go a bit zigzag sideways to the coming weeks. Just where the world is waiting to see what really happens, if things will escalate or will de-escalate on the other fronts. It feels like nobody is really selling and nobody's really buying at the moment because of all the uncertainties, and nobody's willing to take any risks. The holders don't want to risk selling because it might break up to the upside. The buyers don't want to buy because it might break to the downside, but they also seem to be stagnant a bit. We do have some very nice volume abnormality cluster here, so it's definitely, like all the indicators in the charts tell you, that this should be a great place to take a long, but with the whole macro, I'm being really careful with that. I think the market will go sideways, like between probably 37.5-ish and 45k-ish in this triangle. On the higher time frame, it's still looking good, still very long-term accumulation happening, and we are at the bottom of the range or close to it. And if we break this support, we'll probably get down to 3k and have potential capitulation. We could wick below it to that. 37 is an important level at the moment, 34, 33-ish. It's even more important. If we break that, then 30k is probably close. And past that, 22k, because if we break 30k, that's very strong support, obviously. There's nothing really until 22k. Good thing is, based on the history, once we break up that 45k-ish, then there should be little, we should be able to reach like 75, 76k in the months after. So very critical pattern at the moment to look at. Here, same, still in the bottom of that zone. Also no real changes here. Drilling down to a bit shorter time frames, where you see this weekly close from yesterday evening and the instant bounce up, but it did fail to make a higher high even of these little ranging highs, and it completely failed to break, to go even near the 40k. And yeah, there is no, it will go sideways, and for a long term uptrend you really need to break that 45k-ish level. Midterm you want to break the 42.5k, and short term you want to break the 40k. It's as simple as that to talk of a trend reversal. So far it's just sideways with some volatility, like these moves in between from the news catalyst. I think this was the Biden crypto regulations pump and dump. Looking at the Fibonacci's, we got rejected here, and again we got a steep rejection from this cross. It was pretty obvious. We managed to avoid this one, jumping over it. We might wick to it and bounce off again. This is a bit the GAN zone that we've been playing in, and pretty much paints the same picture as the other charts that we just saw. We're pretty much in the middle of the range between the 38 and the 40k, 37 and 40k. I dusted off my Fibonacci channels again from quite a bit ago, and lo and behold, it's still respected like madness. Previous two peaks were exactly on top. So we've been following that line here down, try to break. We're probably going to backtest at least at this level, and we'll see what's happening at these levels. So it's often it just follows a channel or double channel. Like here, it was in this channel, it broke down, it went 2 channels downwards, 3 channels downwards even, I think. It went up and down in those channels again, exactly on this level, exactly, broke down to this, through the channel, went back up, hold it at the beginning of the channel, and now breaking up and backtesting again. So I will be taking a bit more looks at this one, because it seems to be very well respected at the moment. If we look at it from a 4-hour perspective, I think it's even more clear how well it's respected. I'm just going to hide this one. Like here, this channel was very nicely respected, broke down, and it always seems to end. Like here, it stopped exactly at the channel. Here, the relief rally here stopped exactly at the channel, and we overshot it. We came back to it, testing it, failing, breaking, failing, rejected, and finally we had that pump to exactly the next channel here, and only to dump straight to the channel edge again. Rejection here, big dump, rejection instantly, back up into the channel, and even overshooting now. So interesting one to keep an eye on. TD sequentials, a bit of a mixed mood. The 16-hour is at the 7. Let's see how well that was respected lately. Very nice. 8 nines at the top, 8 nines at the pretty much the bottom. We did have that extra wick there. 8 nines and 8. It seems the TD sequential on the 16 hours is definitely on the right spots. There. So it's not, it seems to be pretty much in sync at the moment. We are at a 7 downward, so that means that's an 8, and I'll see if I can paint it in. The 7, this will be the 8, this will be the 9, and from the 9, 1, 2, 3, 4. This is pretty much the 16-hour potential reverse zone, where we could see some more volatile price action. So we're talking about the night from 15 to 16 March. That's tomorrow to Wednesday. Yeah, tomorrow evening, tonight. The 16-hour will be in the potential reverse zone for pretty much a day, until the 17th. So that's after the exactly aligning with the Fed interest rate decision here in the evening. So that's on the 16th in the evening. So that's exactly in the 16-hour potential reverse zone from TD sequential. So interesting alignment there. For the rest, the other time frames, they're pretty much in the sideways part of things. Like the weekly has been flip-flopping between up and downs, no real daily, also a lot of incomplete cycles. The 16-hour is pretty much on par. And I think the 12-hour is also coming to the same point. 5, 6, 7, 8, 9. Also the 16th, 1, 2, 3, 4. Yeah, that's pretty much the 12-hour and the 16-hour pretty much align in their cycle. So this one goes a bit faster than that one. So they will catch up and pretty much align on the same accounts. Low time frames in the sideways chop, so nothing to look at that. But I think this is very interesting, that alignment between the, it's now trying to make a 1, but 1, 2, 3, 4, it has to close. It's pretty much on the edge, but 5, 6, 7, 8, 9. 1, 2, 3, 4. This would be the zone on, yeah, this is also like halfway this 16-hour zone also. So those seem to be aligned, and it also aligns with the whole Fed interest rate thing. Definitely a time to watch out for. Quickly going to the 1 hour time frame. Let's see what the oscillators tells us. On the 1 hour we see a potential reverse zone with a trend momentum direction flip here. So that usually leads for some downwards price action, like the green one is usually upwards, but that even failed obviously in these conditions. We do see that the trend exhaustion was a bit this dump and pump, but it's not really making a very sharp hook like you see in other. It's a bit also in the sideways chop there. What does it do on the 4 hour? On the 4 hour it's still dropping, but not even oversold yet. By far it's still above 0. So it's pretty much in neutral territory here, but in a downwards trajectory. Like we never really got to high levels to consider it like a proper uptrend, and we could take a steep dive soon. So no edge there really. We had this divergence here, but that pretty much already played out on that last night's pump. 30k-ish is an entry for potential butterfly harmonic, but those are never of any value until you reach those levels and get some price confirmation action. Market hyper, on balance, divergence, bearish. SSL channel, it's on the edge, it's in the middle of the SSL channel now, so also neutral zone. Yeah, there's no help from these charts really in these sideways conditions. It's just a coin flip at the moment. What are the alts doing? Some are a bit in the green with some exceptions obviously. Some are a bit in the red with some dark red exceptions. So it's a very tricky market, the altcoins. I'm not touching them at the moment. Still have my moon bags obviously that I just leave there until dust or moon. But I'm not even looking at trade setups for alts now, because these rallies can be so short-lived. When Bitcoin decides to make a move, they're just instantly destroyed. So a bit too tricky for me. So I'm just going to try open the Hedge chart, because I think we took a look at crypto enough at the moment. So let's take a look at some hedge trades that we've been talking about for a while. I'm just trying to load the chart. We see we did have some pullbacks here. If we just take the watch list, gold miners and silver miners are slightly in the red because of the small recovery in the stock market. Gold is in the red. US oil is, this pre-market data is also a bit lower. So they still seem to be in their pullbacks. And it's almost loaded to the other screen. So I think this is just, there's a bit of hope in the market with the recovery of not the recovery, but the renewed talks between Russia and Ukraine. It seems my chart has loaded, so I'll try to add it to the stream. There we go. So US oil fund, I'll take these ones off quickly. We had some very damn good profits in this last rally. We did have a bit of a pullback, but if we take a look at these levels, we see we exactly hit the Fibonacci golden pocket and so far bouncing off it. I think the pre-market data is around 73-ish. What's pre-market doing? Yeah, so 74-ish even. So that's still bouncing on the center line of the previous channel, and it's also bouncing on that Fibonacci golden retrace pocket. So if you're looking for an entry, this is very nice entry with easy to scale up stop loss. If you want to hedge in something that outperforms USD coins, stable coins. There we go. So if you want to take a long position at this moment, no, that's the wrong tool here. We're at 74-ish. Somewhere here we are in the pre-market. So you can just move your stop loss slightly below 0.65. And even if you take the local top, you still have 2.46 risk reward ratio, and even if we make a significant lower high, you still have very solid trade there. So exactly in the golden pocket where we've been pushed back up 1, 2, 3, 4 times already. You could also be conservative and wait until we break the 0.5, so go around to that almost 77 again. Then you still have a 1 to 2 risk reward ratio on this trade, expecting a lower top. Actually, if we make previous levels, it's improving, but I think you can definitely make one that this is very decent trade on that. And obviously you can also play with a bit tighter stop loss where you go just below this sideways range of the weekend. So that one is looking good. I've re-entered it, scaled in, and my average price is somewhere here, so a bit on the water, but percentage wise it's nothing scary at all. Gold miners. Let's switch to the daily. Bit more volatile. Obviously it's more dependent on the gold price, will take a bit. Still very solid uptrend. Some rejections at higher levels and going sideways, but we don't really have any bad drops. I don't think we even made any decent Fibonacci. The 382. So it could go down like 2.5% more, make a double bottom on the 382, shallow retrace target before continuing up. Junior miners, pretty much the same picture. iShare Silver Trusts, removing these old trades. Still, we took out, made a very solid higher high, had those tweezer tops, rejection at 25 exactly, so definitely some profit taking there. But we haven't really got any bad downwards action. Just taking it. Also, not even the 382 shallow retrace target, so nothing wrong there. Still think it has a lot of upside potential, especially if you look at the charts of silver and gold. Let's go to gold. $382 again, just a normal pullback after a very parabolic rally where we went 16% up, and that for gold, that's like insane. You know, Bitcoin can do that in 5 minutes, but gold will take sometimes years to do this, and having this in 39 days only, that's like 39 minutes in Bitcoin, in crypto. So what's a minute in crypto is a day in gold moves. So healthy retrace, nothing wrong there. It seems the hedges are at lovely entry levels at the moment. Would wait it out a bit to see how the macro is evolving. If the Fed pushes through the rate hike and the whole Russian-Ukraine situation escalates a bit further, then these will rocket up and probably take out all-time highs. Like gold, you see, we pretty much try to breach the previous all-time highs. And if we switch to silver, that's interesting because you see in August 20 and in March 22, August 20, we see the silver high price of almost 30 that we tested here, and silver is a bit lagging behind, but you see there was a very big increase in volume, and I think silver is just waiting for that gold to take out its all-time highs. It's like the relation between Bitcoin and Ethereum. Ethereum can lag behind, but if Bitcoin breaks all-time highs, then it will probably go a catch-up rally. So silver, if it goes to the previous all-time highs to like 30s levels, it's 18% upward potential. But the interesting thing is the gold-silver ratio, obviously. If you want to look, will silver or gold outperform? And here you see also a triangle forming. It's pretty much like this, and pretty much like that. And if we would take a very crude measured move to the downside, that would mean silver might outperform gold by, I think, 10%-ish in the coming weeks or months. So if you have to choose between buying gold and silver and you cannot do both, my bet would be on silver for some stronger might outperform gold by quite a bit. I think we looked at most of the hedges. US oil is obviously, we got a bit of a rotation between the risk on and the risk of assets, because there's a bit of hope in the market at the moment, but we have to see how long-lived that is. Alright, I've took a look at all the things. For me, I'm still in hedge trades and some short time frame shorts once in a while. Just waiting for a decent pattern break, taking out local highs or lows. If anything happens, I'll drop it into the private channels, the VIP channels, obviously on Discord. And if there are any big developments, I'll probably put on a live stream later this week. If there's anything happening, we might just go sideways. Alright, thanks for being here. Thanks for watching. I know most of you watch the recordings if I judge by the views. So take care, stay safe, and I hope you have a good week.